Okay. Hi, my name is Dr. Rajendra, and today I'm bringing on the stage Mr. Ajay Singh, who is the MD and CEO of Area Warrior Money. Area Warrior Money is one of the leading financial institute who help the investors in their finance journey. Welcome, Mr. Ajit. How are you?
Thank you, Dr. Rajendra, for having me on the platform. And I'm doing good. I hope you are doing good and all your viewers also are doing fine.
Yeah, Ajit. Thank you. Um, Ajit, today I want to bring one thing, and you always give a good advice to your customers, including me, right? So I want to know. Yesterday, these wars started, and Iran is bombarded. Iran also bombard many U.S. base in different countries altogether. When we see this kind of situations, so there always decline in the stocks and investment decreases. So what is your advice to the investors?
Yes, obviously, the markets like certainty. Markets markets rather hate uncertainty, whether it is geopolitical, a war situation, US, Israel, and Iran, or any other past conflict. There is volatility with a negative bias when there is a warlike situation. But we also need to take a cue from what has happened in the past. The same market, which will be volatile, but it has adjusted itself in the past 20 25 years, and it has seen a lot of conflicts of all kinds, geopolitical, whether it is Russia Ukraine conflict, earlier Israel Palestine conflict, where Iran was drawn into later, and parliament attack, 9/11 thing. The markets uh, are tend to be volatile. Sometimes it opens gap down. For example, tomorrow the markets will be very nervous for sure, but it also bounces back very fast the moment normalcy returns on the street. Any kind of peacekeeping, any kind of treaty, of dialogue with the senior leadership between the countries begin, the market returns to the normalcy.
Okay.
What important thing for an investor is to see that the volatility, one should not try to trade in the volatility. One should not try to leave the position of equity in volatility in the fear that the valuation will go down. Because the way it goes down, it comes back with the same force. So, someone who makes the mistake of going down, especially when the money is not needed for the long period, who makes the mistake of going in a very short period, is not able to come back when the market reverses. So, sitting idle, waiting it out patiently, and letting the market return to normal is the best strategy in a condition like this.
Okay. So what do you advise to the investors? So one thing, like, he should not be worried, but same time he should invest further, or he should see what will be the best time to invest. Can you please guide us
Yeah.
something to the
So,
your
yes. Yeah, so emotion is very real. As an investor, you and I also do not like to see a lot of red in the portfolio going down by 1% or two or more. We do not like, but the fact is, equities are built for withstanding all kind of uncertain environment. Never ever equity investing has been pretty smooth line, straight line. It has always been volatile for some reason or the other, whether geopolitical, economic reason, political reason, or any country specific reasons. But the good news is that despite all the problems, market keeps moving up and forward. For example, 25 years back, when we were just before the parliament attack, the Sensex, which is quoting at about 81, 82,000 levels today, was quoting at about 4,000 back then. And after that, there may have been so many problems. Someone who is already invested and doesn't have incremental money to invest in the market at these levels, so just wait it out, and let the market do its own work, which is adjusting itself and going back to the other important things like earning growth, company growth, and other GDP factors. Someone who's got some money to invest, that too for a long term period, should definitely consider investing when the market is low. But at the same time, it should be done under the expert guidance. For example, you are taking a financial the the professional help. Similarly, someone should not rush into buying anything in the lure of getting multi-bagger return. Taking professional help is very important thing, or someone who is doing on his own should be very careful about doing anything.
Mhm. Okay, nice advice. But when these things happens, generally, family members are, as investor, I may be knowing, but my family member may not be so much educated on the financial terms, right? Or to cover like this in situations, right? So, if there is some pressure from the family members comes, like in this situation, oh, tomorrow market is going down. What you should do? You should, take out some money from your, investment account. So, how to, calm down the situation in the family?
Good, very good question and very practical one. So the communication to the family should be to calm down. The first thing is that a calm person can possibly help another person to retain calm. So the first thing is to understand that the situation like this, while it's not very happy situation, but then it keeps happening once in a while. If you, the best thing to do in a situation like this is to not panic. If you panic, it is quite certain that in a panic situation people take wrong decisions. So the same has to be communicated to someone in the family, elders, spouse, or someone, children, that it is not putting your finances in jeopardy. Why? Because you have made your arrangement for the several months. In the money that is invested in equity is not the money which is going to be needed just for next month, next to next month, and next 6 months. The money in equity is supposed to be invested for a longer period of 5 years or more. So, when we will be talking back 5, 7, 10 years from here, this problem will just appear as a blip in the radar kind of thing. It will not appear as the big problem. Global financial crisis 2008, COVID period volatility, it was a complete uncertainty. 9/11 conflict, then parliament attack in India, and so many other situations. But the market kept on moving up and forward. As I said earlier, in year 2000, there was a problem like dot-com burst, Y2K issues and other issues, and Sensex was trading at 4,000. Today, Sensex is trading at 81,000. So, no one, as I said, markets, investors, no one likes volatility, no one likes markets to go down, but markets do not move in a linear fashion. It moves up and down, up and down. So it should be seen as one opportunity where any extra money should be invested. Someone who is already doing through SIPs, if the money is invested during market fall, they will certainly be benefit. Uh, but even if someone doesn't have SIP or someone who doesn't have an extra money to invest, the portfolio itself will adjust with the new realities, and eventually the market looks further on other factors.
Okay. Thank you for so much, good advice that you can keep your family member in control, at least can control the emotions if changes because of these kind of situations, right? Uh,
Just one
Next,
last thing. Experience
yeah.
teaches us everything, like in life, in investing, and everything else. Experience teaches us to remain calm. A child who has never seen an adverse situation with the slightest difficulty, the child will react much. But an adult will probably solve the same problem with a very ease. Why it happens so? Because the child has not experienced the multiple problems in life, and therefore the response of a child is more like a panic than response of an adult. Similarly, someone who is a child in investing, I mean to say new in investing, will probably react more to the volatility compared to someone who has seen investing, who has seen markets for the longer period. So the longer periods, investing is a friend of investing, and is a friend of investors. Short term thinking, short term market behavior, this is all, these all things can create anxiety and panic, which should be avoided. And how it can be avoided? By bringing the right information, reading the right kind of article, not reacting to the news, not reacting to the panic creators, not reacting to the news mongers, like that everything will be gone kind of situation. So the best thing is to remain calm and composed in a difficult period. That is the best ally for an investor.
So I can understand in different way. It's like life has a good time or bad time to pass on. Same way, these financial time is also like that. If bad time goes, good time also will come, and then your fund also will increase the same way, and
Absolutely.
right. So uh, that is the one. But apart from this, if generally I make a video on educations and to guide the childrens and who are just like a intern or either going to join industry right after their college. So can you give me one advice for them, that what they should do in is when they starting their career, so that they can have the lifelong investment journey? Because I've seen, just like in our age we were not trained on the financial guidelines or financial education so much, and later we understood, and we are educated by ourselves because of the conditions, several conditions around us, and then we learn. So, what is your advice to the childrens who are just completed BTech and going to start their career journey in corporate?
Yeah, very important question from especially from the point of view of new earners, young boys, young girls joining the workforce. As you know, in the government departments, someone who joins any government organization earlier, the first month salary, even in the first month salary, the PF contribution, Provident Fund contribution is taken out, and the balance is only paid to the employee or the government servant. So, in a very organized sector, this rule extends to the organized sector, like big companies, they do. But there are many companies which do not force you to go for PF contributions. So, for someone who is young, should understand that unlike past, where careers used to be for about 35, 40 years, the career now will have a lesser period of maybe 25, 30 years only, because of the high intensity engagement, stress factor, and other lifestyle things. So, what one had to contribute for a longer period of 40 years or so before retirement, and also supported by the government pensionary system. This pension system or a corpus on which one has to retire is to be created by the employee herself. Therefore, it becomes very important to be at least aware of investing from the, since from the beginning itself, instead of wasting first 5, 7, 10 years and then realizing, because before it is, sometimes the feeling is it is too early, and suddenly you realize that it is too late. So you don't realize the period, like when it was too early and when suddenly it became too late. The ideal thing is to start investing a little money in a diversified way. Mutual fund is a good diversification. Take expert advice than trying yourself for several years and figuring out that I was probably doing the wrong thing. Secondly, keep increasing your investment gradually. As your income increases, your expenses increase, and so should your investment. Under the expert guidance, you will make lesser mistakes, and sometimes it may feel like by doing yourself you might save a little cost, but the cost of investment versus the value provided by a professional, a good value can save you a lot of money, especially when your portfolio is becoming big. And like a guide, like a yoga coach, like a specialist doctor or a lawyer, your good financial advisor will certainly save you a lot of money by by avoiding making mistakes for you.
Thank you. I will take a special time, from you on these earlier, new joiners in the industry, so that they can, plan their financial journey better way. today it was just most of the question on the this war situation side, and I want to just conclude with the last question. So, should any investors worried for tomorrow? Again, it's like to make it into the short. Like I think they should not be worried because this is a journey, and like up and down will come just like in life, bad time and good time, and this also will go on. Is that right?
Yes, absolutely. Worrying will not help. Remaining calm, remaining patient, and maintain your composure is going to be your ally.
Thank you, Ajit, for your time, and
Yes, Dr. Rajesh,
uh,
nice speaking with you.
yeah, and I really, happy to see the progress of Area Warrior Money under your leadership as a CEO and MD of the company. And I'm sure it will grow like anything. And congratulations to you.
Thank, thank you. Thank you.
Thank you. Thank you.